Hello, everyone. Welcome back to our weekly Fast Track Money Wednesday YouTube live session. As usual, I'm your host, Yasi. I'm the host of Fast Track, and we have a podcast, we have a content platform where you can find anything about entrepreneurship, money, and career on fasttrack.life. And with me on this Fast Track YouTube live session, we have Matthias. Matthias Richter. He is
Hi
my
everyone.
co-host, the creator behind Financial Imagineer, and his goal is to help you Imagineer your life financially using money as a tool. That he shares his personal experiences and knowledge with you through his articles and blogs. You can find financial-imagineer.com. And then together we create this fast track money course is to help young professionals create a good money habit, learn the money skills, and then design your life so that you can have a bright financial future. And in today's session, we have very special guest. We have Richard Schäli here. Welcome.
Hi, very good to be on your show.
Nice to
Glad
have
to
you
have
here. Yeah, and for those who have listened to the podcast, you might have heard the episode that I interviewed Richard Shelley about his personal story. But if this is your first time coming here, so now he's already 14 years old, not 12. And if this is your first time coming here, and then I will give the stage to Richard. He can introduce himself to you. Maybe you'll find his story very interesting, very inspiring. Then later we will talk more about his fund, the investment, and we will exchange some ideas between Matthias Richter and Richard about investment and your outlook for the future. Okay, so
Sure.
I'm passing the stage to you now.
So, my name is Richard. I'm now actually 15, not 14.
Ooh.
I just turned 15 on the 1st of September. And my focus is really on exponential technologies. So, when I make investment decisions, whether it's in my private portfolio or for my partners, I focus on technology because I think technology will scale exponentially and this will give me the best return. So when I started, that was when I was 7. When I was 7, I bought my first stock. So like a regular elementary school student, I was interested in learning the basics of math, going to the forest, playing with Lego, but I also liked to invest, or at least I started to get a feeling for that topic. And I think that was mainly because I had the privilege to be in a family in which investments and financial literacy is something common. It was a daily conversation. And so I think I was really privileged to have this opportunity and learn about the financial world. And now I'm still ever curious as I was with 7 years old, and I'm now working on various new different projects, not only in the investment side, but also in tech, especially blockchain technology.
Wow, interesting. I'm curious, like because not that many people know the story. When you talk about this was like a daily conversations at home about like the financial world, the market, what's happening. Like you talk at the dinner table, or how is it for you daily conversation?
Well, it wasn't a daily conversation that we had at the dinner table, but occasionally, you hear some words, insurance, you hear taxes, you hear stocks, and that's where you start to ask questions like, what's a stock? Okay, it's a part of a company that you can own, and you will benefit if the company is successful, and you will lose if the company is being disrupted by others.
And then tell us the short story about your how you win the trading game.
Sure. So when I was 10, no, it was actually in the 11th, somewhere there, um, I participated at a virtual trading competition. There were 2.5, 2.7 million participants, and I was able to get to the first place. But one has to keep in mind this was virtual. I took too many risks that come too near to speculation than actually fundamentally backed decisions into penny stocks, and that's how I was able to percent in 1 year, which is crazy because I think that wouldn't be replicable in the real world. And since then, my investment strategy has shifted enormously from a speculative penny stock strategy to a really quantitative tech strategy.
And Matthias, do you have any questions? Since right before this conversation, you were telling me about the euro market, the US, the gold, and then I thought, okay, maybe we should leave this conversation to the interview.
No. This is just the currency markets. But I think Richard here has a lot of like insights about how to pick or choose maybe some stocks based on their background. So my big question for Richard would be like, if you could tell us a little bit more about your investment philosophy. Because
Sure.
I'm at 42 now, slightly older than you, but I'm very curious to maybe understand more what could be the difference there between the next generation, the younger generation, and myself. Like, how do you look at markets? What is the bigger opportunities that maybe I have a blind eye on? I think that's the question I would like to ask you here.
Sure, I think my generation loves to take risks, but to an extent where it becomes speculation, and I think that's wrong. They are in fact able to find opportunities in terms of finding innovation, and older generations sometimes have a blind eye on these things because they think too fundamental. They're too analytic, and I think being too analytic is sometimes a bad thing. But I think the truth lies in the middle of the older generation that has a lot of knowledge in terms of analyzing a company fundamentally, and a younger generation that is visionary and that thinks every innovation is will work out. Any innovation deserves any price, and any innovation is ready right now, because that's not true. But we will have to find something in the middle, and I think that's the truth lies.
I like that a lot. So it's like the older people are looking more at the things they know, they have experience with, and they try to put things in certain patterns that they understand, right? To quantify it, and the younger generation maybe is more open to new innovations for more upside, and then maybe, as you say it, maybe a little bit more naive towards the risks. But of course, the upsides could be tremendous because definitely the world will keep evolving. We will keep moving forward, and to having more chance, more opportunity in that side, right?
Indeed. But I don't think the older generations are dumb. In fact, I believe if I would have to bet $100,000 on an investor, I would bet it on a 50-year-old rather than the amount of speculation that is taking place on platforms like Robinhood, etc., is huge. It's not, So I think right now they got it right, especially with interest rates skyrocketing on an annualized basis. So I think the older generations are on a good path. They're not completely off the radar.
Maybe that brings me to another question I've been very, very curious to ask you. It's like at your age, I was just wondering, I bought my first stocks at age 16, and I was just, wow, like how did you fast track, to say the word fast track, right? How did you fast track your expertise at such a young age, right? How did you manage to, because I think one thing is learn by doing, experience, right? And then maybe learn from other people. So what did you do that you are at this point where you are now?
So I as mentioned, I had the privilege to grow up in such a family, but the privilege is not enough. One has to bring up his own interest into the topic, right? And I personally, I learn faster if I'm, just fascinated by a project. And I was fascinated by stock markets. Profit out of it, but mainly because it's just something entirely different. And if somebody's really eager to learn something, I think he will learn without even realizing, I remember when I was learning these really analytical measures like discounting cash flows, etc. This came near to something that I didn't quite like to learn it because it's for formula, etc. But once I applied it to my analysis, I instantly realized how does it work? How can I apply it to other companies? And it was fun. So I think if one is fascinated, truly fascinated, and is genuinely wants to follow this path, he will learn.
Yes.
Without a question.
You will grow into this in a way, right? So your passion, make your interest, your passion, your daily food, so to say, and then you become what you eat and become what you nurture yourself with, right? Maybe just link to this question. Maybe I hope we do have some listeners or viewers that are younger as well. So what if you have some friends your age and they know and see what you are doing? Are there probably some people sometimes ask you, so how can I move into your shoes? Like, how can I catch up? What would you tell someone that is young or maybe also in his 20s, right? How to get started? What would you say is the most important one? Maybe one part you said already, the nurturing part and so forth, but maybe there's something else.
I think, opening a trading account isn't a too bad idea. It really depends on how much capital you put in. What happened with all these retail traders on Robinhood might seem like speculation, but the optimistic part of it is actually that millions of people, especially young people, started to get in touch with markets, started to get in touch with the economy and the mechanics behind. I think that's really as soon as you have real capital behind something, I'm talking about $1,000, so you cannot lose more than $500 or whatever. So I think start with limited capital, and it will take, I don't know, 3 years, 4 years until you have a sustainable track record, maybe more. For me personally, it took 3 or 4 years until I had consistent gains. But I was more or less following or outperforming the market. But at first, it was so much fluctuation, so much speculation, not real investing. And I think it's really interesting to see that people, they trade, they speculate, but after they will find their strategy. I'm not saying it should be a tech strategy. I'm not saying it should be a value strategy. It's their own strategy, but their path. There's no solution. One has to build his own strategy on the way.
Yeah, everyone will find themselves, so to say. Learn by doing, grow into it, and keep
Exactly.
learning more. Did you have any mentors on your journey besides your family? People that you could go for with questions? Was that of help?
Yes, I was very fortunate to have mentors from everywhere, all around the globe. One was an author I once contacted, and he made a book for technical analysis. And then I contacted him, and that's where he just, he replied to my questions, and we had a chat. And one mentor even sent me books from the US to learn more about it. I was also very fortunate to have, very smart, very successful mentors, in the sense of they were very wealthy mentors. And I think that's something I was able to profit from because of my age, If a 10-year-old to you, no matter who's the successful person behind, he will immediately, all the attention is drawn to this 10-year-old who asks you about stocks.
Yeah, that's quite an advantage. I mean, if any 25-year-old or 35-year-old writes a letter to the book author, I don't know if they will get the same response. Matthias, you should try.
Yes, for sure. Maybe another thing very curious is like for your fund. If somebody now is watching this, where can people find your fund? Where should they go look for your fund? Can anyone invest there, or is it available all over the world? Or
I used to have certificates that were publicly traded, but now I moved to a mandate with just 2 partners, and I think it's the best way for me to learn more, not being exposed too much to the public in terms of my performance. And I think also the structure with my partners is accordingly that I is really focused on me learning more and more. I've been fortunate to have these partners who provide me with their advisors, and these advisors, they really advise me, especially on the fundamentally analytical side of investments, because right now I'm a very tech savvy, visionary guy rather than an analytical guy, and I think I have to learn to be more analytical. Although I think compared to all these Robinhood investors, I'm really, really analytical.
So maybe if you allow me, you can say it's too detailed, but I'm very curious. Like after COVID, this time of disruption and the special, actually once in a century kind of event with a pandemic, we have seen tech and all these things have grown very, very fast. And where do you personally see the biggest opportunities in this decade? Maybe another question, like how much is what is your investment horizon? Is it any longer than maybe for me, 5 years, 10 years, 20 years? And where do you see the big upside going forward?
I manage money, so I have to bring results that are not 20 years out, right? So my investment horizon is 5 years, 4 to 5 years.
Very good.
And that's how I model my investments. I once looked at a company that was in urban air mobility, so flying cars, if you want to say so, and this company could have great returns in 20 years, but not in 5 years. So I have to be careful on that side.
Yeah.
Also, I think there's so much technology out there, really so much innovation. And the question is really, will it be ready in the next 5 years? And there are investors who firmly believe they are ready right now, but me personally, I think most of them could be ready in 4 or 5 years, but that's not something that is really a topic for me, for my investments right now. But I see the potential there, and I have open ears, definitely.
And you're also, before you mentioned blockchain, is crypto something you're looking at?
I am into crypto for a few years now, and I'm actually, I have especially bought during crypto venture and once and again after the crypto venture crash, and sold a quarter ago roundabout at an average price of 52,000. so slightly below where we are right now.
Mm-hmm.
I believe there's too much speculation going on there in the markets, in the cryptocurrency markets, and also Bitcoin or all these cryptocurrencies fundamentally haven't really moved forward that much as performance did. So I think we will need a fundamental catch up until I will buy again. What I see very probable, is that these cryptocurrencies come crashing down again. Cryptocurrencies are a thing that, the mechanism behind cryptocurrencies work like that. You have bubbles and crypto venture, bubbles and crypto venture, So I think that is a very probable thing. Whether we will see a speculative mania to 100,000, I don't know. But I personally will be interested to buy again once we're in the low 20s at Bitcoin.
Nice. Yeah. Thank you. Very well said on the investment horizon. That's a very valid point you mentioned. Like you have to deliver, right? You have to show some results to your investors in a feasible time frame. So I think that's in the industry. Of course, if you have too much of a like waiting time till you deliver, then people will not stick around. So you are helping people now with mandates, and I assume if they would like to work with you, they can find you on your website.
Sure.
Or what other channels are there that people can link up with you?
I'm on LinkedIn, Richard Schäli on LinkedIn, and I post my personal experience, my how I develop, how I learn about new technologies. So there you can especially be updated on me. If you're interested in partnering with me, reach out. And also for the younger generations, I'm on Instagram, but to be honest, I'm not quite sure if I should shut it down and move to Twitter. I think I was really impressed how LinkedIn is really #1 professional networking site. And I think Twitter could be a place to be as a tech-focused investor as well.
I guess each platform you attract a different target audience. You have different peers, right? LinkedIn is more the professional, like you say. In Twitter, what I always admire is you have to find a way to say something in a very short and concise manner. You cannot write too much, and you have to keep it short, to the point, and so on. And this is the key there. And the Instagram, of course, is more like the pictures and so on, which is maybe, except you have some beautiful charts and things to show that are nice for visuals as well. That's maybe not so much the place. I'm also not so much on Instagram myself, but maybe, Yasi?
Yeah, almost all the tech companies, crypto tech companies, they are like they are all on Twitter, and then everybody is. I think most of the tech-oriented blockchain people, they're all on Twitter. And then my last question, you also mentioned in the past about like AI. Are you looking into that, or clean energy, like anything futuristic with technology related besides crypto or blockchain technology?
So I'm really not sure about AI, how disruptive it will be in the next 5 years. Right now, AI is as strong as an algorithm. So if a company pitches me for cancer detection that is all about detecting cancer with algorithms, they are as good as a company that detects cancer with machine learning, or even better. So right now, AI is really a tool. It's not going to change everything, in my opinion, but it has a huge market opportunity because it will improve certain processes, right? I think automation in general, digital automation is a big market. But blockchain technology, I see a huge opportunity there long term, 10 years, 15 years out. Because what I like about the blockchain technology is because it's so underlying. It's actually everything that is connected to money on the internet and that is running for the internet and is money will be added to the blockchain. So the blockchain is really not a layer that is just on top of the internet. It will be the layer at the deep bottom of the internet, and that's that's the real game changer here. It's not it's actually not a big game changer, but once you have really the entire value on the blockchain, you get to realize how big of an opportunity the blockchain is really. But right now, there's no real use case there. So I think we will need to see a fundamental catch up, as mentioned.
I think the infrastructure is still being built day by day by different projects being completed, and then
Exactly.
we have seen different use case on top of blockchain, like a DeFi, lending, and now there's NFTs. What do you think about
Yes.
NFTs then, since we talk about this?
So NFTs, I don't see any potential in having NFTs for art or collectibles. Maybe we could see NFTs being used for real world assets, but right now I think it's a hype, and there's certainly a core technology in NFTs that makes sense, but not for art and for collectibles. And the market is also a few billions, certainly, but I think it will take at least another 5 years until we see first projects that really make sense apart from art.
Yeah. I would like to give the opportunity also to the audience. If some of you have questions for Richard, and if you have any, I don't know, maybe some comments about what we discussed here in terms of investment, different sectors, feel free to leave in the comment section. And I saw some of our audience saying that, Richard, you're very well spoken. And I said, English is not even your first language. And then where did you learn English? Like, how did you, at such a young age, to speak such a fluent English? Besides, you already have this knowledge about financial market. Besides, you also go to school. Like, how did you manage to do all this?
The next question is Richard still enrolled in school?
Can I quickly join through my phone because I have low battery on my laptop?
Sure.
Is that possible?
Okay.
Sure.
Yes.
Let me just...
Okay. We will phase him out. We will put him in the backstage right now, and then when he join later, I will put him back. Okay, I see he's joined now.
So I'm now back.
Okay, now you are in the studio again.
Can you hear me?
Yes.
Yes, loud and clear.
Sure. So I don't know. Is my English especially fluid? No. I make mistakes as well. But I learned the financial world. I learned about the financial world in English. So it's really something that is natural to me to speak about financial matters in English. I sometimes do not know the German words for price to earnings ratio or whatever. So it's really, that's the reason.
And are you still enrolled in school?
So I'm in school, yes. I'm now learning economics. Actually, I chose a path that enables me to subject in English, so I can further improve my English. And next year, I will be going to Singapore for half a year to learn Mandarin. And
wonderful.
I hope I can at least start to understand understand the culture a bit more, especially with China being a huge topic on the market, and also maybe learn some Mandarin. But my expectations aren't too high because I heard terrible things
So you should ask
about
Matt
it to learn it.
because Matt used to live in
Sure.
Singapore for many, many years, and he speaks Chinese as well. And you also lived in Taiwan before. I think you have more real life experience with learning Mandarin.
Yeah, my wife is from Taiwan, and we spent like 3 years in Taiwan and about 6 years plus in Singapore. So if you have any questions, please reach out. I can help you with that part. That should be a piece of cake for somebody like Richard, right? Yasi?
I think to start learning, it's very difficult. Like the learning curve at the
Yes.
beginning is so steep because you are not used to the system. But once you
Yeah.
get on to certain level, then you just need to know 1,000 common words or even few hundred, and then you realize
Yeah.
like there's no grammar, there's no conjugation, there's no like a
No tense, no
past
time.
tense, future tense. There's nothing. You just put the words together, then you already make a
Oh, really?
sentence.
You will need grit.
Wow.
So you will need grit and a little bit of discipline, which both of them I'm not afraid you have them. So it will be simple for you, that part. So it will be different than learning French or Spanish or something like a European language. And at the beginning, you may get frustrated because it will take maybe 3 months until you reach a certain hurdle. So I always tell people, if you want to learn Mandarin a little bit, it's very hard. But if you want to learn it very well, it will be easy. So shoot for very well, go for that. And once you cross that hurdle, like Yasi just said, you don't have to think about many things. It's just about adding new words to your vocabulary, and then it will become very natural.
Yes,
Yeah,
the good thing is I'm only studying Mandarin there, so there's no school, and I will be able to get to know the government of Singapore, and because I think when doing business, I think Singapore has done things very right, and I think me a lot in how to manage a company. I do not have to manage a country, but a company. I think I will be able to learn a lot from that side. But yes,
Sure.
go on.
Yeah, nice. No, it's interesting because both Matt and we both lived in Singapore for a long time. I mean, you live in Singapore. I don't know how many years. I can also say I'm from Singapore, so it's very good to know that you are going there to spend half a year. I watched a documentary about one of the world's famous investor. Forgot about his name. He moved to Singapore, raised both of his children there, and then has a full-time mentoring
Tim
teacher in
Rogers.
China. Yes, what's his name?
Tim Rogers.
Yes, yeah. So
The
both of his
venture
daughters,
capitalist and the investment biker.
yeah, both of his daughters speaks fluent Chinese, and they live in Singapore. And then I think I'm seeing a trend that more and more people start to learn Mandarin, especially like a younger generation. From yeah, I'm very interested in your journey. I think it's a very great adventure that you spent half a year in Singapore. I think you're going to enjoy it a lot.
Yes, second that. Also, we have another question from
Sure.
Freedom 35 blog. Does Richard have any book recommendations on finance or investing for someone who would like to learn more?
So the first book I started with was actually a book on technical analysis and all about chart formations, etc. And that doesn't reflect my investment strategy. I have not at all. So it's I was able to get into investing that way. It really taught me the basics of trading, not investing, and that's why I like the book so much. But I think for somebody who's getting into it and doesn't want to go the path of first speculating and trading, but just directly to investing, I think he should go Benjamin Graham, really. This is just completely about value.
Mm-hmm.
And I think our generation has so much tech in their mind that tech will come from itself. It's all about going more to the value side of investing,
Yeah,
right?
using tech to create value for the society and others. Yeah.
Yes.
Okay, Benjamin Graham. Matt, any books that you would recommend?
Well, for investing, if you want to keep it simple, The Simple Path to Wealth from J.L. Collins. I think this is a beautiful book for people who are new to the whole investment thing. Another book that I love a lot is Your Money or Your Life from Vicki Robbins. It's more about like not just money, but what my blog is about financial imagineering, like make your dreams come true, live your dream life using money as a tool. So it's not money in the center, but how to use money as a tool. And Your Money or Your Life is a beautiful book about putting a lot of things in relation, maybe also to learn about how to think differently. I think in our world, it's very hard to be different sometimes, right? If everyone has the same thoughts, is aligned, and you become who you spend the most time with, right? And if you want to be a little bit different, like save more, invest more, and so on, either you find your gang, you find your group, or a book like Your Money or Your Life shows you what could happen in your life if you just follow the normal path, right? And there's so many things you could unlock by thinking or doing a little bit more out of the box.
Yeah.
That's maybe that part that I love a lot. It's not so much about investing, but for investments, definitely look at The Simple Path to Wealth if you want to get started.
Mm-hmm. I think one side we're talking about like investing, the books, the investing books, and the other side the books you recommended, like we talk about for average person, you're not getting into investing, trading, understand the market, but more to manage your own personal finance. It's a good starting point. Then I would
Yeah.
add one. If some of you are watching this, you are below 20 or early 20, just reach that, poor dad.
Oh yes, classic.
Yeah,
Sure.
easy to understand. All
I
right.
think personal finance, managing his own money, being able to read numbers, whether it's on your bank account or it's about other things, reading spreadsheets. It's really important, and it's becoming increasingly important, in my opinion. More and more debt is accumulated at a younger age, and I think investing is really stage 2 of this. We have to teach personal finance in schools, and best case, we could also teach investing. And I'm not talking about buying single stocks, but index like S&P 500, putting in $500 each month and letting the compound growth rate work, And I think that's where our government, our education system really has to work on. And together with a colleague, I'm actually working on a project that will teach personal finance in a school for a few classes, maybe about 1 hour a week, and I think that would be a huge success, especially for the students who are able to participate in this class.
Wonderful.
Yeah, amazing. I think it will create a huge impact, especially for students at a younger age. Is so important. And also, I'd like to just highlight that that's why Matt and I also create this fast track money course.
Yes.
Maybe not for students, but for young professionals who never learned it in school, who never learned it with the parents. Then it's the time for you to educate yourself. Yeah, totally on that with you. Totally agree. Personal finance is so important. Investing comes later. First, learn how to manage your own money, get your numbers right. So if we don't have any other questions from the audience, do you have any last message for our audience today?
Yes, I think what my message would be, especially on the investing side, because I think you do a fabulous job on the personal finance side, especially on the personal finance side. I think you should really have a closer look at value investing. Although I'm not a fan of pure value, I think the truth lies between tech and value investing. Because what we see right now is that we have tech companies that have huge multiples, and with increasing interest rates right now, we can see very, very big corrections in the markets. And so I think take some money off the table, think about it, whether these companies really deserve these valuations, because I personally never to experience multiples and bad valuations for tech companies, but I'm sure we will see a completely different picture in maybe 1 or 2 years.
Yeah, right. Thanks for the message.
Well
And
spoken, yeah.
yeah, and who has the fortune to experience for that event, Matt, New Economy?
Yes.
Oh well, that was my first takeaway. So I started at 16, and I sold also the more, how to say, traditional shares, and I went into tech stocks back in the late 1990s. Everything with .com suddenly surged and tripled and quadrupled, and it went up and up and up, and at the end, of course, we all know what happened. The new economy bubble burst. That was my first big experience of this happening. And it was terrible if you go through that the first time. So that was my tuition, so to say. Luckily, I ended up just where I started. So I didn't lose money, but actually it went up and down, and it was very painful. And going through that is something, you said it very humbly. You said you didn't have the opportunity yet to experience that, and it's very wise of you to foresee something like this could be coming. Certain things like this have to reverse to the mean sooner or later, right? So things can be, you can be wrong for a longer time in terms of under or overvaluation, but sooner or later things have to revert to the mean. That's maybe one thing, right? And yeah, I also don't know what's going to happen next. One thing could be, right, that of course, really the big tech companies you see sometimes they gobble up so much of the small and mid caps and smaller companies. So a lot of business has been consolidated in them. So maybe the earnings growth, especially with COVID, they still have above average growth for the moment, but that might reverse as well. And if interest rates go higher, what you mentioned before, right, the discounting cash flow model will further punish like earnings that are like 10 years ahead or 20 years ahead. If you do the math there could be a lot of things that can change fast. Yeah.
Yes, just to show you the power of interest rates, I was making a model for a Brazilian fintech company, and valuation I got with the interest rates we have right now was $10 billion. That was about the market capitalization we have right now. And the other result I got with just 1% more interest rate, which is really, it's a thing that could happen in a year or so.
Yeah.
The valuation was 2 billion. And so that would be a depreciation.
Yeah.
Okay. And so
factor of 5.
One should be really, really careful with that, because having an 80% loss is not something fun, I think.
Yes, indeed. Yeah. And what about interest rates go up to 5% from there, right? It could be even more. Who knows?
Yeah. And I don't see any other questions from the audience for today. And I guess we're coming to the close of this session. And thank you so much, Richard, for being here with us, sharing your personal story, your view on investing. I hope it inspires some of the younger people, not in their teens, but maybe even in their 20s or early 30s. On the other side, before getting investing, also know your numbers, understand your personal financial situation. Start with, educating yourself. If you'd like to know more about, what's happening with Richard's company, follow his personal experience, check out his LinkedIn. So you can find him on Richard Schäli, A with umlaut, like if you're not German speaker, A with 2 dots on top. I hope you all the best in Singapore. Have a great trip and looking forward to talk to you more in the future.
Sure. Thank you for having me on the program, and continued success with Fast Track.
Yeah.
Thank you so
Let's
much.
all fast track together. Thank you so much. Okay.
Sure.
Bye-bye, guys.
Bye.
Bye.